Hey everyone, we're going to get right into the stock market charts. I want to cover an early morning video and some couple trade ideas and trade setups that seem to be triggering right now. I want to point those out. The other thing is, if you're new to the channel, I cover stock market technical analysis, and really the trade strategy and trade style that I talk about on this channel is all about looking for trade setups typically well in advance before the market even realizes that they're there, and then we wait for the trade triggers, which tell us it's time to actually take the trade. And that's really it. And then once you take the trade, you manage the risk. So I teach all these concepts that I'm going to go through in these videos in my trading and technical analysis course. I'll leave a link in the description below if you want to check that out. It's not free. I charge 99 bucks for it, but it's well worth the money. I think it's going to help add to your skill set and give you the ability to find your own trades, which is well worth more than 99 bucks in my opinion. At least it has been for myself after I've learned this stuff myself. All right, now I want to start out here with the just broad market analysis. There's not a whole lot that's changed. We do have the Fed coming out tomorrow. I believe they come out and talk tomorrow at 11 Pacific. What is that, 2 Eastern time? And they're going to, we're going to talk about that. Actually, let's get into that real quick. So the Fed this is a big meeting. The market's at least built it up to be a big meeting. We've got there's two forces at play. We have inflation and deflation at play. The inflation is clearly running well above their targets. All the producer price index and the inflation readings, the CPI, consumer price index, they're all coming out well above expectations. So basically, inflation's here. It's running hot. And is this the inflation that the Fed is going to say is transitory and they're going to keep pumping the market? Or do they need to actually step in and start to do something about it and hint at tapering? So the market's going to be listening for tapering talk, any kind of hint that, okay, they have to actually start to address the inflation. If the Fed chooses to not address the inflation and let things continue to run hot, that, tech might like that. The stock market might like that, I think, in the short term. But I still think there's potential for some negative impact and negative effects. If that happens, we're going to watch gold. We're going to look for gold to go up, look for commodities, ag commodities, anything that's based on this inflation, kind of material stocks, any kind of stocks around that should actually, continue to spike higher and run. If they hit at any kind of tapering, we're going to start to see the market, go in, probably have a correction. I'm leaning on the second one right now. I think gold, and I'm seeing some of these inflation stocks breaking a little bit of trend in the short term, at least. I think it's a longer term trend that will continue to play out, but maybe the Fed wants to let a little bit of air out of this, this bubble basically that they've created in the market. And so to do that, they're likely going to try to manage the market coming down a little bit, but be okay with it. So let's watch for that. All right, so triple Qs. We will, I still think there's the potential for a back test. I don't know if we're going to get that today. Maybe we get it after the Fed. They pump it right up, hit the back test, and then that's it. But I still think up around 350 is the potential area or target for an objective short entry on the tech sector. Now, again, if we do that, we're going to be backtesting this trend line right here, which was broken back here in May 10th. So that was your sell signal telling you that this upward trend coming off the March 2020 lows was actually is actually finished, and we're going to start a new downtrend, or at a minimum a sideways trend. So there's your breakdown, your sell signal, and we look for this backtest to be the kind of area of rejection. All right, so that's all I see there. Now, why do I think that we're going to continue to go down, even if we go up a little bit and get rejected at this trend line? Big negative divergence was intact. So, again, we made divergent highs here, meaning price was higher than momentum on the PPO and the RSI. Again, these concepts I teach in my course, so you'll be able to understand these if you take the course. And then this is another divergent high. So we've got continued negative divergence with the back test. It's basically the setup that you look for an objective short entry. This is very similar if you just want kind of me to show you kind of this same setup. These setups show up all the time. Let me go ahead and pop that one open. Right here, Peloton, very similar setup as Peloton, and I'll show you. Basically, Peloton, you had an upward channel right here. You put in negative divergence, and you broke trend right here, your sell signal, and you ran up and did a back test of that broken trend line. So there was your back test, and from that high, you pretty much went down. So again, that's what the triple Qs looks like. It's very similar. Upward trend line, break of trend, negative divergence, and a back test of the trend line resistance, setting up for an objective short entry for a trade to the downside. And again, nothing on Peloton. I'm not really covering Peloton. I'm just trying to overlay the examples of how these charts look similar. And SPY hasn't really changed. I mean, you can see we're just kind of drifting higher. Again, I'd watch the Qs, the triple Qs, XLF and XLV. SPY's kind of drifting higher, but SPY's going to likely do what these other sectors have done. Looking at these other sectors, XLF, you can see here clear breakdown in the upward trend. So here was your upward trend line, made a bearish rising wedge, put in negative divergence up here at the highs. So each high up here was a negative divergent high. We break trend, and it's just selling ever since. So in general, continues to look like we're on a sell signal. Now we're going to have little bounces along the way. Maybe the Fed, they pop this and then it continues to sell. But looks like we're going down. And same with in the industrials, XLI coming off the March 2020 lows. Clear uptrend line right there. And we put in divergence, negative divergent highs right here and here. So these were both divergent highs, these candles. We broke trend, and it's been nothing but selling since. So coming down to 101.50 looks like the first level of support. Likely get a bounce there, but I think we've got to get down there a little more and likely going to get some kind of a reaction. But I still think that reaction, that whether you bounce, I think it's going to get faded, and we're going to continue lower. Heading down to 93.80 is the next level of support. So again, these two sectors, financials and industrials, these have been kind of the inflation sectors, and they're all breaking trend, starting to come down a little bit. Let's flip over to the commodities. And one commodity, actually, I want to point out copper. Copper is right at trendline support. This is CPER. It's a copper ETF, but you can see here right at trendline support. There's copper. It gapped down, and it's right at trendline support. So we should hold, but we do have big negative divergence right here. So you'll see divergent high, and there's your lower high in momentum. So negative divergence in copper. We look for a break of trendline support. Now, you just run down, you gap down like that. I think it's likely you're going to get at least a reaction or a bounce, but I think we might break. And then if you look at FCX, which is a copper miner, this one broke trend. So here's FCX, clear uptrend line on the daily chart, and we started to put in negative divergence. So there's a divergent high, there's a divergent high, and I talked about this in some of my live streams and videos when I've covered Freeport-McMoRan. I talked about the fact that, yeah, it's in an uptrend, but it has negative divergence, so I'm not interested in necessarily being long. There's a clear breakdown of trend, broke all kinds of support. You can see I had another support line. We had this diagonal, ascending support, got a sell signal, pretty much in the last couple of days. And then we had another horizontal support at 37.84. That it gapped right down to that and just has sold off since. So clear selling in copper, down almost 7% today. Freeport-McMoRan, I'll probably have to tighten that one up. We're likely going to have a little reaction right here at about 30.30. And then another reaction down here about 24, we'll call it. Somewhere right down around there. But yeah, so the point that I'm trying to make is these commodities are starting to kind of crack a little bit. And same with like soybeans. I haven't been interested in soybeans. I mean, I bought it, I bought it on on this trendline support a couple weeks ago, and I sold it into this pop. But now, the reason why I'm not interested in kind of holding it longer term or in the medium term, negative divergence, clear negative divergence there on soybeans. Divergent high, a new divergent high. You can see, lower momentum. So negative divergence. So I think we're going to break this trend line. I think it's likely. And we're going to, pull back. Now, the pullback, I think, is a buying opportunity. So I'm not necessarily looking to short it, but I am looking to buy some of these ag commodities when we start running down to some of these support levels. So, possible level right there. I'll have to kind of tighten it up. It looks like about 2050. Yeah, I'll do a little more homework on some of these support levels, but I think it's going to break. That's what I see in soybeans. Corn's got a ways to go. Corn might just fall down to this kind of its major trend line, down to about 1867 or so. Possible slight dip down to 1750. Again, that's a buying zone, I believe, for corn. Anywhere in there looks good to me. Coffee. Again, I marked that out, but coffee is on a sell signal. You have this uptrend line here on the daily channel or on the daily chart. Negative divergence, slight negative divergence, not a big it's not a big divergence. So I think coffee's likely going to pull down to this zone right here. Top of the zone is about 40.70, and then bottom of the zone is about 39.96. And that's, for me, looks like a buy zone. Looks like the area I'm interested in going long coffee again. So those are some of the commodities, but it looks like some of these inflation trades look like they're starting to give some back. You can see lumber here. Lumber's kind of crashing, basically. Lumber spiked just parabolic higher, and now it's crashing. Lumber you could drag this down to here. It's summer right here. This is probably the benefit of the Dow trend line right there. So we're likely coming into support on lumber. But lumber from the highs to the lows has come down, almost 45%. So it's been cut in half in terms of that price. So we're already seeing some of these ag commodities and some of these building materials come off. So let's get into a trade idea I want to point out. Now, it triggered yesterday. So again, I point these out in my charts well in advance. I don't always cover every single stock. But if I cover something and I talk about a trade setup and you think it's interesting, I think it makes sense to throw it up on your chart, keep it, and maybe set an alert in case it triggers and I don't cover it in a video. I saw it yesterday after my video. And I took a trade on it. So this is LPX, Louisiana Pacific Corp. They're in the building materials, forest products. I don't know exactly what they do, but it doesn't really matter. But you have a daily chart. You have a clear uptrend line. Let's get rid of this one right here. But you have this clear uptrend line off the April 2020 lows. You had two reactions here, a third reaction there, and you can see. We've now broken that trend line. Now, it's not super impulsive yet, but again, we broke it yesterday, follow through, down day. We broke it 2 days ago, follow through down day yesterday, a little more selling today, down 1.5% almost. And negative divergence. See the big negative divergence on the PPO and the RSI, clear negative divergence. So all of this was divergent high, divergent high, divergent high. Then we started to break trend. So also a possible head and shoulders top. All right, you got a shoulder, head, shoulder, possible head and shoulders top. Look for those at the end of extended uptrends. I'd say that's a pretty extended uptrend right there. So looking for this to come down to 49.20 roughly. That's the next level of support. And it looks like we have some support down all the way down here. Oh, let me grab the right tool. Looks like we have some support down here and this line probably needs to be adjusted right to about there at 34.07. That would be probably the final target on that one, but that looks good to me. And then another one, JCI, I've talked about this. March 2020 lows, clear uptrend line right there, bearish rising wedge up at the top with big negative divergence on the RSI and the PPO and a sell signal yesterday. Hasn't really gone too far today. We don't have follow through. Again, it's right before the Fed. So, the Fed could foil these. That is very possible. Taking new positions right before the Fed is elevated risk, so understand that. But the chart is what it is. It is a sell signal. So I took both of these short, and I'll just stop out if they recover these or pop them back up above that support line, and this ends up being a false breakdown. But as of right now, it's a sell signal. I think it's likely we're going to continue to the downside. Next level of support on this one, it looks like it's all the way down here at 62.32. May not look like much, but that's a drop of, that's about 6%. And then, yeah, we've got we've got some support way down here. It looks like there's another level that I don't have marked out, which is right about there. Probably, slightly, right in there at about 50 to 60. So yeah, those are some targets, and then a target down here at 48. So DraftKings this morning came out. There was some short selling company or short hedge fund, a short fund that they came out and said they had a short position in DraftKings, and it's good to know that we're aligned with some of the bigger funds. I took some profit this morning on this gap down, pretty big gap down. You can see from yesterday, this morning gap down almost 12%. Anytime you get a move where something drops 12%, and especially a gap down, it's usually a good idea to potentially take some profit. So I took some profit, and I'll likely add back my short on a gap fill back up to here, or even, which is all the way up here at 50.64. That looks like the area where the short sellers are going to step back in. Again, we're looking for a move down in DraftKings to about 35.70 is a level of kind of more major support, and then 30.66. So those are two key levels I'm keying off of. But when you gap down, active traders can, take profit and cycle back in. That's what I'm looking to do. So a little higher, and we'll probably cycle back into that one. Another one, let's see, what else is working? I mean, a lot of these trades I pointed out are working. Winnebago continues to drift lower. This United Rentals, clear breakdown and sell signal. Here, this was your sell signal. So again, when I point these out now, the trade's kind of gotten away a little bit from you. If you're not in the trade, then you haven't been following me for the last few weeks, where I've been talking about this all through here, saying we're looking for the sell signal. This was your trade. If you take the trade now, I mean, if they rallied up into a back test, you could be down 15%. That's a pretty big move. Again, you want to take these trades when you get these breakdowns, and that's why I point them out well in advance. But I just want to kind of follow up on them. Tesla's just drifting sideways. Still looks like it's heading down to 460. Toll Brothers, you can see, just continues to drift lower. Nothing's changed here. We're likely not going to do much today. The market's likely going to go into a holding pattern. This one's interesting. Bank of America coming into some support here pretty soon. I'm likely going to take some profit and then cycle back in potentially after the Fed. But we've got some support right there at about 40.24, 40.25. Again, I always step in a little early, but a little bit more downside. And we'll likely, I'll probably take some profit. And that, probably another 1.5% or so to the downside. Maybe we get it today, maybe we get it tomorrow before the Fed, I don't know. That's the first level of support. And then, if you look at the drop from where we got the sell signal up here, that's a move so far of 5% in just a matter of a few days. So continuing to work on that one. Boyd Gaming, you can see kind of drifting lower. Again, we had, this one, you just take a step back and look at the bigger picture. Oftentimes people, when they start seeing trades go against them, they lose sight of the bigger picture. The bigger picture is a big uptrend line in Boyd Gaming coming off the March 2020 lows, divergent high up here at the top, a sell signal or a break in trend, a swift move down, kind of confirming that sell signal, a back test, and this is where everybody starts freaking out. Oh, Boyd Gaming, it's wrong. I got to cover and get out. But again, technically nothing's changed. We broke the bigger trend. We're just, we had the sell signal. You had a kickback rally. And now it looks like we're starting to resume the downtrend. All right. So as this works its way down here, people, this is where a lot of people who didn't want to short up here, they'll want to start shorting up here. You'll maybe get an impulsive move down, and then we start covering and taking our profit. Starbucks, I haven't talked about this one for a while. Still on a sell signal. It's kind of drifting sideways. Seems like it's waiting for the Fed. The market's going to drift sideways likely till the Fed comes out. But you have a clear uptrend line right here. You have big negative divergence on the PPO. Not super clean negative divergence on the RSI. It's an equal high on this RSI. But it's still there. Clear sell signal of that break of trend and a back test, and we're just been going sideways. So I'd probably watch for kind of a break of the lows as being the next sell signal. Probably, I would say, I'd say a daily close below this 109.66 will be likely the next sell signal. If we get that, we should move down to 101.24. Another stock I want to cover is AMD, if I can find it. Okay, so AMD, I still like this to the downside. We've just been holding support so far, and I haven't talked about it because it's been drifting sideways. But AMD, this is coming off the February 2016 area, clear uptrend, and that trend has been broken. All right, you had a divergent high, so there's your negative divergence, which was basically right through there was your negative divergence. Now, so that tells you that uptrend line was going to break, and we did break. There's a clean sell signal. Back tested once, back tested twice, didn't quite get up there. The point is we've just been drifting sideways, but below this uptrend, kind of creating a sideways trend, and I'm still looking for downside movement. Do I want to short it right here? No, not really, because we're in the middle of this range. We could run up and do a full back test, or we could break down. I'd be more interested. I mean, I think it would make sense to have like a starter short, maybe nothing too big, and then add to it if it continues to drift lower. But I wouldn't go crazy. But a break of this 73.60, 73.50, a nice close, hourly, daily close below that, and that is going to be your next sell signal. And if we get that, we should drop pretty quickly right down to $59. I think it'll happen within a matter of days. The reason why we bounced off this trendline support, we did put in bullish divergence, and that's why I covered my short on AMD. Went down here at support, and we started to bounce. I saw that this breakout candle right here, and I covered the short. It was a profitable trade, and we had bullish divergence, so no reason to stay in a short when you're starting to bounce and at support and put in bullish divergence. It signaled that it wanted to go higher. One thing to note, though, if you, again, take a look at the bigger picture, we have a high up here. We then made a new high, a slightly lower high. And recently we've been making, just kind of treading water, making lower highs here. So, again, if we break this low and put in that lower low, it's going to be obvious this thing's going to be in a downtrend. We should drop right to 59 pretty quickly and potentially lower. Okay, so that's that. We can take a quick look at gold. Gold looks like it's breaking down a little bit. I think gold's coming down to this 1790, 1800 area. This is my next buy level in gold. So I've lightened up on a lot of my gold miners, and clearly that's been the right move. So they're all selling off. That's why I'm seeing kind of a little bit of air coming out of this market. I think the Fed's going to start to talk about tapering and potentially, let some air out of this bubble. And so, gold will likely sell off a little bit during that time. The Fed won't have the ability to let too much air out of the bubble, though, because everything gets pretty bad pretty quickly if they let things get out of control. Okay, that's all I have for this morning. If anything else changes, which I doubt it because of the Fed, likely the market's just going to gyrate, sideways till the Fed talks tomorrow. So let you guys go. Leave me a thumbs up on your way out. I do appreciate that. It helps the channel, kind of encourages me to keep doing these videos. Check out the course, and I'll catch you guys on the next one.